Hello and welcome to Gemcast.
I think in the last 5 years, the world has become a less safe place, and there's been escalating global tensions. And defense hardware requires a lot of critical minerals.
On the ground, what are we seeing? What critical mineral opportunities are we seeing? Is there specific countries?
I think the opportunity lies in here. Critical minerals are located across the globe. Given the size and scale of emerging markets, a large portion of the deposits are located in the likes of Indonesia, Southeast Asia, and Africa. Africa itself accounts for 30% of the critical mineral reserves in the world. Because EMs are largely undeveloped, there probably is a lot more deposits that have yet to be discovered. When we go into a mine, we assess the ESG first up. We understand what the risk areas are, what we need to mitigate those risks, and how we monitor that going forward.
What comes next here? What's your 5-year forecast?
I think one of the key challenges we've got to face is
Hello and welcome to Gemcast. Today I'm joined by portfolio manager Viloshan Govender, and we're talking about critical minerals and rare earths, which is definitely topic du jour at the moment. So, Viloshan, before we get into that, do you want to just tell me a little bit about yourself, how you got here at Gemcorp, your passion for emerging markets?
Great, thanks, Tom. Good to be here, everyone. I was born and bred in South Africa. Studied in university in South Africa. I started my early career as a chartered accountant with PwC before moving into the investment banking world with two regional banks, ABSA and Standard Bank, where I focused on structured capital solutions across the African continent. I've been at Gemcorp for about 5 years, and I'm a portfolio manager in the private credit investments team, focusing with a little bit of niche to minings and metals. My passion for EM really emanates from where I grew up. I grew up in the environment, and I really saw what difference economic development and growth can make in an emerging market. And that's why I tried to pursue my career in that same vein.
Oh, great. So another member of the Gemcorp team with our deep roots in emerging markets. So
Yeah.
putting me to shame. So look, as I said, critical minerals, rare earths, it's the topic du jour. Why? Why has this suddenly become a big thing? What are the big structural themes driving this? Like, why does everybody care? Why is this all over the FT and Bloomberg and everything else?
There have been four really thematics driving this demand over the past little while. The first is really electrification and EVs. EVs require 6 times mineral input than a conventional car. And similarly, batteries that go with EVs and mobile phones and tech require a similar amount. The demand for batteries over the past 5 years has doubled, and that really has driven the lithium growth in the market. The second real thematic is really AI and data centers. There's a big tech drive and AI, and these require huge data centers. And with that comes big copper, aluminium, and steel requirements to construct these data centers. The third one is really energy, clean energy. And in the world today, we're all about sustainable clean energy as we worry about our climate. And what that means is you have solar, wind, and hydro projects that are being erected across the globe. And these, by very nature, require a large amount of mineral input. For example, wind turbines require a large amount of rare earth magnets. And solar PV systems require lots of silicon, copper, and aluminium in their construction.
Yeah.
And the last one, I think certainly not least, is defense. I think in the last 5 years, the world has become a less safe place, and there's been escalating global tensions. And with that comes national security and defense. And defense hardware requires a lot of critical minerals. So I think we don't see this trend abating, and it's accelerating, if anything else. And this will continue to do so for the next couple of years.
So we've got these 4 mega trends driving this huge demand for critical minerals, rare earths. Where does emerging markets fit into this then?
Critical minerals are located across the globe.
Yeah.
But I think given the size and scale of emerging markets, a large proportion of the deposits are located in the likes of Indonesia, Southeast Asia, and Africa. Africa itself accounts for 30% of the critical mineral reserves in the world. And I think because EMs are largely undeveloped, there probably is a lot more deposits that have yet to be discovered.
Yeah.
So it's a big opportunity for the critical mineral sector to focus on EMs. I think importantly, Tom, as well, is that we've got to remember that it's not just getting stuff out the ground, it's also where it's processed and refined.
Yeah.
Now, in the current environment, we find ourselves that China is the dominant player of refining critical minerals.
Yeah.
And only more recently have Western economies really started domesticating their refining and production capability. But this will take a couple of years to get more online.
And the China trend is because we didn't want to do the refining in this country. There's a environmental impact. Where did that trend come from?
I think China in itself is a large country, and they have large amounts of production capacity and refining capacity that were built for their own supply. The Chinese were also very early movers into EM by investing into critical mineral supply to facilitate their own economy. And with that, I think the world became dependent on the China supply chain.
Right.
I don't think that'll change in the short term, but given the trade and tariff wars, I think the Western economies have got to start developing the capability to domesticate their production, refining capability to secure their own supply chains.
And I suppose of those 4 mega trends, I mean, all of them massively influential in developed markets, but I guess defense is the one where everybody's going to get the jitters in terms of saying we're scared of China having a kind of stranglehold on the supply chain.
Yes, I think defense is key. I mean, given what's happening in the US currently and how they're trying to secure their own supply chains, as well as grow out their Defense Department of War, as it's now called, they are pressing a specific amount of capital and federal capital into critical mineral projects. A lot of Western economies are setting up specialized critical mineral funds to focus on investments into EM and secure that supply.
And I guess you can't move the critical mineral deposits, right? You can't, onshore a copper mine or cobalt deposits. So if they're in the ground, where they're in the ground, that's where you've got to work.
Exactly. I think the reserves are where they are.
Yeah.
I think to your point, I think infrastructure development is linked into that because what you can get the mineral out of the ground, but if you can't move it, you have nowhere to go. So the Western economies are incentivized to, one, focus on critical mineral investment, but also infrastructure development surrounding those mines in the emerging markets.
And I guess that's probably a neat segue to the investment case here, because that's why you're here, why I'm here. So what's the investment case? How do we unlock this structural trend, this huge demand? There's a sort of bottleneck. It feels like it's got all the ingredients for a kind of an interesting investment thesis. So talk to me about what the thesis is for us at Gemcorp.
Well, I think if you take a step back, we've got to understand that I think there's a massive underinvestment in emerging market economies globally. Development banks estimate there's about an annual investment gap of between $350 and $400 million in emerging markets. So that's where private investment and private credit can play a role. We can provide that bridging capital to make those investments and make an investment case for that. Although we also got to understand that this is EM and there's a specific skill set that's required to actually undertake these investments with enhanced due diligence, taking into account local requirements and such. I think we'll always see big corporates and majors play in this space in EMs. But what we also got to understand, there's a large proportion of smaller projects that are underinvested that no one will really look at. And I think that's where our investment thesis comes in, is looking at the smaller project that still have the resource underpinning it, but to a large extent are trading at a significant discount to their intrinsic value. And therein lies the opportunity for private credit and private investment for investors who are, one, seeking yield, but also to secure a critical mineral supply.
And so what you would say is, so if you've got some huge copper deposits in, XYZ African country that are really easy to monetize, then, there's any number of players who will come and do that project. But actually, at the margin, there are loads of smaller, very interesting projects, maybe for different critical minerals and rare earths that are not so in the vogue, but are still vital for the mega trends that we're talking about. And our role is maybe filling in underneath the majors in terms of exploiting those.
Correct. Yeah, we've got to work with local players and local governments to unlock these smaller deposits. And I think over time, there's probably going to be a need to consolidate those smaller players so we can naturally move them towards the major players. But I think that is our role, is to educate investors about EM, is to bring them along our journey of understanding, show them that we can mitigate the risk that is perceived in EM, because I think that's largely misunderstood, and bring those co-investments and investments into our structure and building that out.
And so let's make it a bit more concrete then. So, I'm Tom Hughes Exploration Limited. I found a great cobalt deposit in Zambia, say, right? Talk me through how we at Gemcorp will work to utilize that deposit you talked about the infrastructure part. That's really important as well. So it's not just about mining investment, right? There's a
Correct.
whole value chain that needs to be built out.
Yeah, correct. I think, how we would look at it is twofold. One, the fundamental analysis of that resource and that mine, and does it make sense for us to do that? But also in a wider landscape of how do we need to work with the government and local players to facilitate that investment. There's obviously a lot of local regulation, a lot of local job creation that we need to follow.
Yep.
But by working with them, we can partner with the locals to create this this investment into the mine. The second part of that, as you correctly said, is the remaining part of the value chain. We can get the minerals out of the ground, but someone needs to buy it and someone needs to transport it.
Yeah.
That's where Gemcorp can also play, is that we have facilitated a specific fund where we can look at the trade finance and commodity finance angle of these underlying critical minerals. And so in that way, we have total visibility of the value chain from an investment perspective and from a monetization of the critical mineral perspective and getting it where it needs to be in the world.
Okay, that makes sense. And what about the ESG, the sustainability part of this?
Yeah.
Mining has maybe we say a checkered reputation, might be a kind way of putting it. Certainly in some of these emerging markets, I'm sure some of the people who are listening will be saying, yeah, but come on, there's been some bad stuff that's gone on in the past. As an investor, how do we think about that?
Yeah, I think, historically, this probably wasn't on a top priority for a lot of people. But, as we grow into EM and as we go into the world, ESG is the number one priority, really. When we go into a mine, we assess the ESG first up. We understand what the risk areas are, what we need to mitigate those risks, and how we monitor that going forward. I think it's supremely important to work with the local communities, ensure that they are comfortable, they are safe, that the water supply is secure for current and future generations, and that we leave the mine after we're done in a way that still good for the environment. And in that way, there's a lot of restoration capital that's set aside for that. From a Gemcorp perspective, we have an internal head of sustainability that we work very closely with in order to assess these risks, work with them, and implement procedures to mitigate that in the long term. It's also become a government requirement. Government want local content, job creation, but ESG is a supremely important thing for government to ensure the sustainability of their own economy in the long run.
But I guess it's mutually beneficial, right? So if you can get the ESG part right, that's a huge part of the risk that you can address from an investment perspective as well.
Correct. I mean, whilst it's important for the locals, it's also important for investors. A lot of development banks and development funds want to ensure that the ESG is the number one priority when we're looking at these projects. So it's beneficial for investors as well as the local communities and ourselves, because a good rated ESG project ticks all the boxes from an investment and a sustainability perspective.
Okay. You talked a little bit about private credit, but from an investment perspective, how do we structure these things? Is it about taking an equity tranche? Is it a credit transaction? How do we do co-investments? How do we bring other people into deals? How do we think about that in terms of the pure investment and driving a return for our clients?
Look, I think mining investments is no different to any others. We look at the basic fundamentals of the mine. What drives the revenue? What is the cost base? What is the cash flow generation on that? Around that, we structure what is the most suitable instrument, whether that is an equity investment or whether that's a debt investment. We also understand what it takes to repatriate capital out of the local economies. But we also got to cater for the downside. When things go wrong, how do we put ourselves in a place that's protected? And we do that in a few ways. We are quite heavily involved in projects, so we have quite high visibility into the management team, the operational committees, board observers, and we also structure offshore enforcement points, where in that way, if we do need to act, we can act very quickly and steer the boat in the correct way.
Okay. That probably leads me on to a question about risk. And I've had these conversations where I'm sat with an LP in a room and I say, we're really interested in critical minerals. They go, yeah, so are we. This is great. Get these mega trends, understand it all. And I say, okay, brilliant. So it's a mine in the Democratic Republic of Congo. And their kind of jaw hits the floor and I can see them glaze over and think, yeah, this isn't for me. So if you're part of that conversation, what do you say to somebody to say, okay, how are we mitigating that risk?
Sure.
How are we driving the capital from the developed markets into EM and into sort of solving for this kind of big structural theme?
Look, I think what we've got to understand first is that the risk is misunderstood.
Okay.
I think people think, as you say, their jaw drops when you hear DRC, but you've got to understand the risk and how you mitigate those
Yeah.
risks. I think one of the key challenges we've got to face is understanding what the political and landscape is and regulatory landscape is in that environment.
Yeah.
We've got to understand that critical minerals and mining is a key national resource for a lot of these governments. And governments will insist on state participation, royalty mechanisms, job creation, local content. So I think how we go about doing this and mitigating this is, again, working with partners upfront, not bringing them in at a later stage, understanding what the requirements are, and structuring the deal in a way that takes care of those local requirements,
Yep.
so that to ensure that we don't have issues down the line.
Yeah.
In that way, we structured the deal correctly. Government is happy, investors are happy, and it's a deal that can attract capital because it's a key critical mineral itself.
Okay. So there's just a deep level of expertise that we have because we've been doing this for over a decade.
Yeah.
In terms of saying, actually, we can understand those risks, mitigate against them from a structuring perspective, but also we have this tailwind at our backs from a kind of critical minerals perspective in terms of demand.
Yeah, correct. And I think it comes down to education. I think, like you said, we have a large track record in working in EM. We understand the risk a bit better than most other investors. And it's about bringing them along on that journey to understand the risk, how we see it, and how we mitigate it. I think, our history at Gemcorp is one of co-investment partners too.
Yeah.
We've done that successfully over time. And I think it shows that we can definitely understand the risk, mitigate the risk, and make investment a lot easier in these EM jurisdictions.
Okay. So we've sort of covered the investment case, how we approach it. So on the ground, what are we seeing? What critical mineral opportunities are we seeing? Is there specific countries? Like, what do those transactions really look like? Like, where are we seeing the goal?
Look, I think the developed market is quite saturated.
Yeah.
There are lots of players, banks, financial institutions, and majors that play in those.
Yeah.
I think the opportunity lies in EM. It lies in sub-Saharan Africa, where I mentioned there's 30% of the world's critical mineral reserves.
Yeah.
Southeast Asia and Central Asia, who also have large deposits of critical minerals. The deals we're seeing are twofold. Is one, direct mining investments from junior miners.
Yep.
They are the less loved crowd of projects that don't attract the necessary international capital. And so we work with them to try and do good deals. The other part of it is the infrastructure development. There's a lot of infrastructure development in EM that supports mining, but also supports just economic growth in the country.
Yep.
Those are the type of deals we're going to see more and more. And with the thematics that we mentioned earlier in terms of AI, defense, clean energy, those are still sectors that are going to continue to be driven in EM markets, supported by critical minerals, but also investments in themselves, investments into wind farms and hydro projects, as well as data centers. Those are key themes that we're seeing more globally, more every day.
Fine. So there's a kind of whole set of the value chain that we can invest across in terms of exploiting this theme. That makes sense. Okay. So kind of, again, I finish on the same question for most of our guests, which is the kind of crystal ball moment. So, what comes next here? What's your 5-year forecast? You talked about a lot of things that we're thinking about, but you know what? Does the Chinese stranglehold continue? Trade wars still dominate the agenda? Is it going to be Trump versus Xi Jinping, or are we going to end up with something that looks completely different?
Look, I think China's a dominant player today.
Yeah.
And will be for a little while. They've built up a position, and it'll take a while for that to change. It feels like a bit of a land grab at the moment in terms of critical minerals, where the Western economies and the Chinese economies are going into EMs and securing critical minerals for their national security. So I don't think that changes over the next little while.
Yeah.
But what is changing is the allocation of capital from Western economies to EMs and to critical minerals. Once that gets through the system, you will see more and more Western economies securing supply.
Yep.
But we'll also see a consolidation of some of the smaller projects into larger ones to make it investable for larger scale investors and Western economies. So I think that's where we're heading. It's a very interesting space. Critical minerals will always be important, and none more so in the current environment. Depending where, I guess, global geopolitical tensions lead, the defense sector may continue to be a driver or may slow down in the coming years.
Yep.
But I think the other sectors or themes that I've mentioned will not. We are all moving towards a more sustainable, clean energy for tech advancement is continuing to grow, and the likes of AI. And electrification of the EM is continuing to do so as well. One of the things that I didn't mention earlier is that when we're electrifying these EMs, which haven't historically been electrified, the grid itself takes a lot of critical minerals, such as copper. So those trends will continue to go as there's more urbanization and electrification of EMs that have historically been underdeveloped.
Okay, so we've got some big old themes impacting all countries globally, constrained demand, and a really compelling, interesting investment opportunity. Viloshan, thank you for taking us through that with your deep expertise and knowledge. I really appreciate it. I definitely now feel slightly more knowledgeable on the topic of critical minerals and rare earths. So thank you very much. Thank you to our listeners for joining us today on Gemcast. And to get more information, visit gemcorpcapital.com. Thank you very much.